Hello, and thanks for joining us for this video case tip. I'm Bryn McBride of ABC for Health, and we're talking about a quick update to cost sharing reductions. A lot has happened just in the last couple weeks, and we're going to talk about that. But first, we're going to refresh our memory of what we're talking about when we say cost sharing reductions, or CSRs. Well, back in 2010, when the Affordable Care Act was first passed, it included different types of subsidies to bring down the cost of insurance to people buying health care in the individual market. Now, this was only available to people buying plans inside of the marketplace, not outside of the marketplace. And that included things like tax subsidies and cost-sharing reductions. Cost-sharing reductions was money paid by the federal government to insurance companies as a way for them to bring down the cost they would pass on to the consumers. This adds up. This is about $8 billion in annual payments to insurance companies, or it should be. Now, there's been a lawsuit, and it's no surprise. This was one of the lawsuits filed back when the House was voting over 60 times to try to repeal and replace the Affordable Care Act. They also filed suit against then Secretary Burwell, Secretary of Health and Human Services, saying that these insurance company payments should not be made. Their argument was actually that no money was ever appropriated for insurance companies to be subsidized and paid by the federal government. Well, the Obama administration at the time, under the direction of Secretary Burwell, countered that argument and said, oh, yes, it is. There was money appropriated for both tax subsidies and cost-sharing reductions. That lawsuit has now carried over through the change of administration, and it's been more or less on hold. There's been a number of arguments back and forth, and the current administration is using it as a bargaining chip because a lot can go wrong if those cost-sharing reductions disappear. And time is of the essence, and we're going to talk about that time in just a second. But in the meantime, insurance companies have to file their rates. They have to tell what their rates in the marketplace will be for 2018 coverage. Well, they can't get a really good read on what rates are going to be unless they know what all of the subsidies available are going to be. They also haven't been receiving their cost-sharing reduction payments as of late from the federal government, so they think they're being held over a barrel a little bit. Arguments are going back and forth on both sides of the aisle of politically how this can be used to pressure either one way or the other. Is it a bargaining chip to be used to try to undermine the Affordable Care Act? Or are cost-sharing reductions a leveraging tool to try to force a federal budget in a timely manner so the feds don't have to put the budget on hold? And so you can see this gets into a big political quagmire. In the meantime, rates are supposed to be published for the marketplace. Well, the Center for Medicare and Medicaid Services has issued a memo as of the previous week in August that said, we're going to extend that deadline. Insurance companies, you now have till September 5th to tell us what your rates will be in the 2018 marketplace. They cite the reason for this as being the uncertainty in the market, mostly in the cost of insurance caused by the administration's rhetoric on eliminating cost-sharing reductions. Cost-sharing reductions have not been fully eliminated. It is being used as this leveraging chip. But because of all of the rhetoric around it, insurance companies say there's too much confusion over what the cost of insurance will be, and therefore this is now put on pause. In Wisconsin, insurers are filing their rates with the assumption that cost-sharing reductions will not be funded. What does this largely mean? It means the cost of insurance is going to go up. If cost-sharing reductions are not funded, that means an increase of about 20%, and this is a number that comes to us through the Kaiser Family Foundation. Premium increases would be even greater in states that did not expand Medicaid. And overall, the impact of not having cost-sharing reductions just means what everybody from hospitals and advocates and providers and insurers themselves have been saying: it causes instability in the marketplace. Some insurers have actually cited this as a reason for already pulling out of the marketplace for 2018. And you've seen news headlines of insurance companies that cite uncertainty of the market and instability as a reason they're not going to participate in the future. So solutions? Congress can fix this. They absolutely can fix this. This is something that they can do by just saying, we're going to provide money for cost-sharing reduction, something they might find bipartisan support to do. But then again, you've got to keep in mind who we're talking about in both the House and the Senate. The same people that held the Affordable Care Act over a barrel will also be arguing to hold cost-sharing reductions over a barrel, continuing to use that for political leverage. Here's the reason why this might not happen sooner rather than later, any decision on either fixing cost-sharing reductions or any movement in another way, because those rates by the insurance companies need to be filed by September 5th. Guess who's on recess until September 5th? Congress, they're in their August recess right now. They're not even coming back to work until the day that rates are supposed to be filed. So there's not going to be any resolution to this issue in the next month. Is it still being used as political leverage? Yes, on both sides of the aisle. You can read a lot more about this, including the CMS letter to insurers extending that rate filing deadline. We give you that link if you were to click on the information button. We also share 2 different sets of analysis by the Kaiser Family Foundation. One titled An Early Look at 2018. This kind of summarizes some of the things that are up in the air and the impact of prohibiting things like cost sharing reduction if that is the way this administration wants to proceed. They also share another analysis, and we have that link here, that is more specifically looking at just the cost sharing reduction piece. You can visit those links by clicking on the information button. You can also send us an email, and you can visit our website at healthwatchwisconsin.org. If you are watching us on YouTube, go ahead and like and share that link and subscribe to our channel. Thanks for watching.